Hey guys, and welcome back to another episode of the Growth Stock Investing Challenge. Sorry for taking last week off, just had some things come up, but I will be back again making regular videos this week. So a little bit has happened in the meantime. The growth portfolio is sitting at a valuation of $1,915.33. So it's been a little bit of a rocky road over the last couple weeks with the market. We really saw a big drop about a week ago on the news about what's happening over in China with the lending and debt situation, potential for default on some loans to Chinese companies. That kind of sent the market in a little bit of a tailspin, but it's been a little bit more steady in the days following, so it's definitely something to keep an eye on. And I'll probably talk a little bit more on my Wednesday video. But this portfolio has been up for the last week, up about $27.53. But for the month, though, we are down. Of course, like I said, a little bit more volatile going into like mid-September, especially that week here was a pretty big drop. But I've been steadily adding cash to this portfolio, buying the dip, and just kind of buying value where I see fit. For the quarter, we're also still down, but of course, I've been investing a lot of money, so it looks like it's really trending up. But in reality, we've actually lost $81 this quarter. And for the year, we've actually really underperformed the markets. We're down about $5.21 all time on this portfolio. I started this in mid-December of 2020, so kind of been disappointed overall, but still, I believe in these companies long term. It just hasn't really been a banner year yet for growth stocks. So, getting a little bit about my holdings. These, if you are new to this series, new to this channel, these are the holdings I currently have in this portfolio. So I have Salesforce, Tesla, Amazon, PayPal, Roku, DraftKings, Activision, Academy, Lemonade, and Teladoc Health. A lot of these are down pretty significantly, but I have made nice gains on companies like Tesla and Salesforce. So, as far as my activity over the last 2 weeks, pretty much just made 2 buys. I put 25 in last week and 30 in today. And as usual, I just kind of let these purchases just auto invest. So I let the computer allocate funds as needed. So last week, like I said, I deposited $25 and that went to 6 different companies. So bought a little bit of PayPal and Lemonade and then Roku, and then just $1 or $2 went towards Amazon, Activision, and Teladoc Health. So some of these, like Roku, PayPal, and Lemonade, had been kind of trending downward as of the week prior to last week. So did allocate a little bit more money to those. I was happy to pick up a little bit more PayPal and Roku. Lemonade, I'm not quite as bullish as I was maybe a few months ago, but it is still a holding that I plan on continuing to hold for the foreseeable future. This week, of course, DraftKings really got pummeled, so almost all of the $30 went towards that, $17.22 worth. So that did pick up about a third of a share, so I was happy to see that. I'm going to talk a little bit more about DraftKings later in this video, just kind of a little bit of breakdown on why I'm still bullish on DraftKings long term. So other than that, in the portfolio, not a ton is happening, but like I said, a lot of these companies, especially over the last month, has really been hit hard. Companies like Roku, DraftKings, Activision, and many of these others, but Salesforce and Tesla have continued to actually have good market-beating returns, which has kind of helped limit some of these losses. So like I said, as the title of this video suggests, I wanted to talk a little bit more about DraftKings and just why I've remained so bullish on them long term. This is definitely a play that will take several years to develop, especially considering some of the circumstances surrounding DraftKings as a business. So if we go over here to the DraftKings interactive chart on Yahoo Finance, we can kind of see the last year has been a little bit volatile. So last year we really saw DraftKings on an upward trend, just like the rest of the market. But March of this year, we saw it top out at about $72. And then by May, it kind of bottomed out to lows of around $40. But ever since then, it's kind of been trending up again. And then now recently, in the middle part of September, we've seen it drop off again. So DraftKings, for a number of reasons, has kind of faced a lot of resistance. both in terms of share price and as well as legal trouble. There's been some concerns about some of their business practices, and that's kind of created some jitters on Wall Street about their feasibility of really being a successful company over the next decade or so. But we did see a little bit of a death cross here, where the 50-day moving average moved below the 200-day moving average, but we could be approaching a golden cross here, although this downward trend is going to kind of offset that, so it's possible we not see these fully cross, or if they do, it might be very short-lived. I'm not sure if this is really a bullish indicator, but it is, again, something to watch. So if you look at DraftKings from a more fundamental standpoint and not a technical analysis, you can see that their revenues have actually really jumped up over the last couple of years. So these are all, so about 191.8 in 2017, and then last year jumped up to 614.5. And then this year they're projecting about 1,064.9. So these are huge, huge increases year over year. This is kind of offset, unfortunately, by rising expenses, which we can see that their general and administrative expenses have also greatly, greatly increased, especially this year. They're going to shell out a lot of money. This is for a number of reasons, but mostly they have to basically pay a lot of money to get the word out, to get these state legislatures to basically approve sports betting and sports gambling in their states, which cost a lot of money, especially for lobbying and really running campaigns in a political sense. So these aren't typical business expenses that a lot of companies have to do. I mean, every company to some degree has to lobby different state, federal, and local governments to kind of pass favorable regulations and legislation. But DraftKings is really fighting an uphill battle here, where they have to actually get basically their main segment of their business legalized in all the 50 states. It's been a slow go for them, but it is one that has steadily spread throughout the country. I'll cover the map here in a second, but again, I just want to kind of cover that I don't think that these operating expenses and these are really a fair evaluation of DraftKings. I don't think there's some kind of reckless companies that spends needlessly, but I do think, of course, it is something that any investor needs to be aware of, because the more they spend and, these operating income is actually widening in terms of losses, that is kind of going to be damaging for the company long term, and it could make it difficult to kind of climb out of that hole, especially if they're racking up enormous debt. So as you can see, again, net income to the company has actually decreased significantly over the last couple of years. But again, basic revenue numbers such as like revenue per share has also been steadily increasing, which again is a good sign. But there are some concerns here, I would say, especially if they don't kind of ramp up their ability to get legalized in more states. So just to look at the map here, this is kind of the biggest bull case I have for DraftKings, and the fact that a lot of these states have not legalized sports betting in any capacity. Major markets like Florida, Texas, and California are still not legal. So obviously these are extremely populous states. That would be a huge market for DraftKings to be able to get into, as well as like Georgia and New Mexico, Missouri, Kentucky. Companies like, states like this are going to be huge markets for them to target if they can get legalized. Other states such as like North Carolina and Maryland and Connecticut, Arkansas, Nevada, Washington, Oregon, these states have all legalized sports betting. It's just not live yet. So DraftKings is still setting up the infrastructure in those states to get it up and running, which again will be a huge boost for them. So if you are interested in being a DraftKings investor, or even just using DraftKings as a service, I mean, I know where I am, I would actually love to be able to sports bet in my state, but I'm not currently able to do so. So you can definitely get on the website, and there's like options, like if you live in Missouri, to contact your lawmakers to get them to consider sports betting legislation I know like a state like California, I believe they're actually about to send it to their voters to see if they will approve sports betting in their state. So there's definitely many ways to do this, but if you are interested, feel free to contact your lawmakers to see if they can bring it up on their legislature's floor, or they can send it to the public for a vote. There's many ways to do this, so definitely do your research and check that out. But if you're just looking at their fantasy sports, which is really how they got started, that's legalized almost across the entire country, with the exception of the states in the Northwest and Hawaii. I'm not really sure why that hasn't been, legalized up there yet, but there does seem to be a correlation here geographically, at least. So guys, that's going to pretty well wrap up this video. Of course, any suggestions I make are strictly just my opinion. I'm not making any formal investment advice, so please do your own due diligence and research before making any investment decisions. So with that being said, get ready to check out my video on Wednesday where I do my dividend portfolio update, and I look forward to seeing you guys then.